together. So we get now to our next segment, and I'm going to call upon Mr. André Potgieter, who is the Chief Executive Officer at the First Capital Bank. Can we just give him a round of applause as he comes to give us a keynote address? Please, 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 please. We can do better than that. We can do better than that. Please, we can do better than that. Let's just encourage him. I know that we can do better than that. Thank you.
Afternoon, everyone, and thank you for that warm welcome to the representatives of the Ministry of Agriculture, the organizers, and ladies and gentlemen, thank you very much for the opportunity. I always start with saying it's a privilege for me to work and to talk to people and to be in the company of those who's interested in where our food comes from, working so close with nature and with our creation. So my presentation today is really just my practical and over the years a bit of experience around agricultural financing, what I've seen works, what is important in the process. So nothing theoretical, just really some tips maybe and maybe some guidance in terms of how we go about financing. And it's really both from the financiers side as well as from the farmers side. So I think some discussion both ways. So as we look upon the subject, we need to recognize the importance of agriculture to our country. It provides food security. The sector creates employment. It's a source of livelihood for many. It poses export opportunities for Zambia, and in Zambia specifically, a great potential to grow. Despite this importance, the agri-sector still remains an underfinanced sector. The reason for this is mostly because it's seen as inherently risky. We know weather patterns are unpredictable to some measure, as we live in an era where technology really helps, and there's some predictability that has come to the table around this, but there's price volatility, some cases long production cycles, ever increasing input costs, lack of collateral. All of this contributes to the perceived risk. However, understanding this sector well and with a few principles, I believe it's about managing this risk and being able to port agricultural finance. So the first of maybe a few basic principles I'd like to share. So as a financier, I think the first important point is you need to be in this wholeheartedly and for the long term. So you need to make sure from your front end in the bank to your credit department to the board of directors, everybody has got buy-in and you've got support to actually finance in the sector. And I think maybe linking to this is the need to assist farmers throughout the different cycles. Recoverability in agri is good. If you are willing to finance a client through the cycle, you are able to recover your installments and loans. Maybe if you'll bear with me, I'd like to maybe just give you a quick example of experience I personally had many years ago. I think you've all know Ceres fruit juices. So there's a Ceres Valley in South Africa where this is produced, most of the fruit. And in end of 2000, 2001, the farmers there were going through a very, very difficult time after a few years, tough years in the agri side. And the institution I was working for, we actually had a majority of the market share, so couldn't really say we are going to foreclose and sell assets in order to recover our money. So we sat down and looked at all of these farmers, and we had to actually reschedule some of those loans, taking over carry debt, a lot of installments that couldn't be paid, and we restructured debt over 10, 15, and in some cases even 20 years. That's the only option we had as a bank. It was 2 years later when in that valley the farmers had an excellent crop, very good quality, good yields, good prices, and an exchange rate that assisted them. And they paid back all of that debt and had cash in the bank to actually farm cash going forward for the next season. So I think that just gives an example of the recoverability around agriculture. But having been part of an experience like that, it also helps one as you look and view the next credit application. So that type of experience from a financier, understanding the cycles, very, very important. The next point is really around, you need to have runway in terms of financing a client. There needs to be opportunity to restructure loans, to finance carryover debt if need be. So really, I think you all know the example of a financier. It's often used to the banks. They say you give them a client an umbrella, and then when it rains, you take it away. So I think sometimes in agriculture it's probably the other way around. They give you the umbrella when it rains, and when it gets dry, they take away the umbrella. But I think the point here is really around agricultural financing, is to be able to support clients throughout and to be able to restructure where needed. I think the next point is really to make sure you understand your client well. You cannot finance a farm from the office. You need to be there on the ground. Speeding and timing is of the essence. Very important in agriculture, as you all would know, that timing and sometimes having to, for example, spray or put in fertilizer at a very key point is very important, and that basically impacts your yields, which impacts basically the repayment ability of that loan over time. So very key to be able to move at speed as a financier. Then obviously structuring debt correctly, very important. So what does a financier consider in evaluating a loan application? Maybe thought I'll go through a few of these points from a financier. What do we look at in assisting a farmer? The first is obviously is the farmer themselves, the promoter. The technical ability of the farmer is important. How long has he or she been on that specific farm? How successful have they been through previous cycles? And how do they perform through these cycles compared to their peers? I think very important to understand and know your client very well. Being a farmer is a job you need to predict weather, you need to have perfect timing, you have to plan ahead, you have to do finance, you have to do HR, marketing, you need to have legal background in terms of contracts. So it's a very difficult job and very important to know that you've got a promoter that can balance and manage all of those things. I think very important is obviously to have a long-term relationship with your client, and that there's room for honest, open discussions. And then maybe something that I often look at is, I call it the full-time versus the weekend farmers. And I hope I'm not going to tread on any toes, but very important. So a weekend farmer to me isn't necessarily a farmer that just farms weekends, but maybe just a story. You may have also heard about the matchbox. There was two dairy farmers, and the one dairy farmer's yield or his average milking on his shed was very high, and the other one very low. And the one that couldn't produce as effectively on his milk production asked the other one, so what do you do? And he said, no, just take a box of matches, and every morning and every evening when you walk through the milk shed, you shake this matches. And it was about a month later, they bumped into each other again, and they asked, so how's it going? He says, no, my yields, my average on my milk has actually increased. So he said, but what is it about the matches? Why did that make the difference? And he said, it's because you are in your milking shed every morning and every evening. That's what makes the difference. So in farming, it's really about the footprints on the farm. You need to be there to quickly understand and see what's happening. So very important in terms of looking at the promoter. The next one is obviously the quality of the farm. How quickly does grazing, for example, recover? what type of soil, over and under fertilizing, obviously coming through soil sampling, important, the rainfall history, water availability, and even monitoring of some of these things, very, very important as we look at financing. Then the next one is diversification. Very important. In different seasons, you have different conditions, different weather and cycles. There's changes in prices and in the demand for the product. So diversification just helps to sometimes and many a time even out. And if one harvest specifically doesn't produce, another comes through. So very important to look at diversification on your farm, that all of the income is not just from one specific area. And then infrastructure, we look at from a financing point of view, is a farm fully operational? Does it still need to be developed, or is it to get it to its full potential? So a lot of money we know on farms are spent underground. You don't see it, but it makes a very big difference. And it's important to understand this finance that I'm delivering to this client, is it towards a farm that is already fully developed, or does it still need funds in order to get to its full potential? The next one is equipment capacity. Can the farm effectively operate with equipment on it? Obviously, as we've mentioned, timing is important, so planting and harvesting in time is very important. Even looking at livestock farms, how far does an animal need to walk to get to their watering points? All of that very important to see, is this farm adequately equipped in order to produce the maximum yields so that it can be used to repay whatever finance there may be. Commodity price stability, very important. As a bank, can you rely on the price? How close can you bring it to certainty? Does it provide sufficient margin? And in this case, offtake agreements many a time provides comfort to the financier. Debt service ability, very important we look at in terms of the yields and what is expected from this farm. Would it be able to repay the loan? And then the risk reward, obviously pricing always comes to the talk and to the table. Very important to look that there's no surprises over the long term, and everybody is open and honest in terms of what pricing the specific finance would achieve. And then I think important for the financier also to look at the value chain, understand the business throughout, from the farm gate to where it's used at the end of the day. I think those dynamics and understanding the entire value chain will help you to mitigate the risk and understand the farmer better on the front end. So maybe quickly going through the different things that needs to be financed and how it's done. Maybe just some guidelines around it. The first one is obviously land. Very important that we look at the value, the market value of that land as a financier. We will look at the market value versus sometimes the production value. We've seen at times you're willing to pay a premium for a neighboring farm because you can farm it as a unit. But then if that farm needs to be sold off separately, it's maybe going to derive at a lesser value than what the farmer next door is willing to pay for it. So there's a lot of considerations around just the value of the farm, as I've mentioned. And then looking at the repayment ability of that farm, and usually this is where we look at long-term funding. Pricing can become an issue because of the longer term that you need to finance it on, but very important on this finance is to schedule it, as I've mentioned, according to the cash flow. So in most of these cases you will look at semi-annual and annual repayments. And then obviously, as I mentioned, also to look at what is the equity that the promoter would put into the transaction, and all of that would play to, and all of that would be considerations in terms of financing land. The next one is equipment and vehicles. Important for the financier that this must be productive or income generating to the farm. Doing it over the correct tenure is important, usually 3 to 5 years. We've seen many a farmer using their overdraft or even cash to finance equipment. Not a good idea and not ideally structured as such. Very important to rather look at financing it in the appropriate manner when the cash flow does become difficult, that is where it then becomes a challenge to refinance or to restructure. Improvements, obviously a difficult one to always finance. I'm talking about fences, water lines, etc. But definitely also possible to finance that on a separate structure to the individual and over an appropriate time with the right repayments, as I've mentioned. Then lastly, input costs. Very important, obviously, on the production cycle to be able to assist in terms of financing the input cost. I think the important one here is obviously that would just be over the tenure of the production cycle and paid off after the harvest. I think there's more difficult in herd capacity building and longer-term biological assets, i.e. fruit trees. But once again, understanding the farming operation and structuring this correctly is important. Then there's some general working capital facilities that a farmer would need. That is your day-to-day labor costs, diesel, and other expenses that runs on a daily basis, and that is usually done by an overdraft or a very short-term facility with a bank. So maybe just then looking at a few financing principles. I think I've already mentioned matching the repayment with the cash flow, that's the production cycles of the farm. Then I think important what we've seen also to understand as a financier the difference between the annual financial statements, the timing of that versus the timing of the farm cycle. So you may find that the financial year end we've seen in the past maybe includes the income and expenditure of that cycle, but even some expenditure of the next cycle when the client has bought fertilizer ahead or paid for their chemicals. So very important to understand the production cycle versus the financial statement cycle. So as a financier, you need to unpack that to properly understand it in order to give your client the right solution. And then I think be in touch with your farmer and the farmer to be in touch with your financier in time when it gets to repayment dates. Many a time we see repayments going into arrears or not being paid in time. So we all know in agriculture it's very difficult to predict, to say exactly when a harvest is going to be ready or production is going to market is not always possible. So very important that history that you build with a bank in terms of your credibility is not to let that repayment go into arrears. Speak to your financier in time so that it can be rescheduled to the right timeline, and according to that you'll obviously build a good credit record with the bank. I think the other point is understanding what happened in the seasons across the landscape and how your client performed against this. So what we look at is when you're through a production cycle, what was our assumptions and the cash flows that we projected, and then how did the actuals was different from that. And very important to understand where things did not perform according to the projections. So as a financier, you would look at, for example, if it was price that caused that, it's a different risk than when it's yields that caused the income not to be as projected. So very important to unpack that with your client and then obviously put measures in place going forward. And as I've mentioned, if a specific season wasn't good, how did this specific client perform in that season against their peers? Because that would tell you how good your farmer was in a specific season. And then lastly is to know the macros, obviously very important in agriculture. So who is potential financiers? Firstly, obviously, and we've heard about that, commercial banks, very important to support this sector, and they would basically be able to provide products across all of the points I mentioned in terms of needs, from the land to the equipment to working capital to production input. So banks would be able to support across all of those. Then there's development finance, government and bank integrated agri-finance schemes. We know about the Farmer Input Support Program, Sustainable Agricultural Financing Facility, and then there's also donor and multilateral funding schemes that can be made use of. Input supply finance, we see many a time that suppliers of fertilizer and seed, for example, will grant credit to their clients, and very important aspect of financing as well, and a well risk mitigated approach in financing. Then there would be crowdfunding and investors. This is still in early stages in Zambia and a bit fragmented. However, there's a few fintech platforms offering agri crowdfunding functionalities. Sometimes I believe it will grow, something I believe will grow given the interest in Zambia and the potential in agriculture. So may I leave just with a few recommendations. I think both ways, as I've mentioned, good communication, very important between the financier and the farmer. Update on the risk, progress of the activity, so regular visits and engagements, very important. Precision farming is becoming more and more important. Keep up with the technology and data and make maximum use of it. I think we've heard about the insurance as well. You know, the finer data you've got and the more precise we can be with regards to history in any farming activity, at the end of the day that should lead to lower insurance premiums as well, because the insurance companies would be able to be very specific with regards to the risk, maybe for that product and also for that area and for the specific farmer even. So look at alternatives in finance, seek various options, investigate what's the best combination of finance to provide you with alternatives options, so that at the end of the day you come away with a good average cost of capital. Obtain offtake agreements as far as possible. This mitigates the risk and provides comfort to financiers. Refine data in order to support precision insurance solutions. I think I've touched on that. And then partnerships is going to be key. Blended finance and risk sharing will enhance appetite and increase activity in financing agriculture. Ladies and gentlemen, that's from my side. A few points I would have liked to bring across this afternoon. There's maybe just, I'll close off with a saying that said, if agriculture goes wrong, nothing else will have a chance to go right. Thank you very much.